I'll be today's host. We're just joined by Al, one of the sponsors on today's project. The other ones who are here still with us, Ben Marshall, Ashki Hedvat, we'll introduce everyone in due time. We're also very lucky to have our partners from Kenwood who will be doing some of the construction on this project, Jerry and Boris. We'll get to them later as well. Throughout the presentation, I do ask that you hold on to any questions until the end. We'll stick around for those and make sure that any questions, concerns, comments are addressed in due time. Now, let's jump into it. We have a lot to cover. There's a lot of great information here. But before we do that, I need to throw out a small disclaimer requested by our legal team to make sure that everyone is aware that this opportunity is only available for accredited investors. This is a investment that is registered under Rule 506C and as such has certain laws and restrictions that applies to it. Please speak to a legal professional if you are unsure of your investment status. All right, cool. Now that we've got the formalities out of the way, I want to tell you about today's presentation. We're going to take the 30,000 foot view and we're going to dive all the way down into the details. We're going to learn about the firm, Chestnut River, the location, and the story behind this property and how we all came to be here together today. When you put all of those three together, you come out with a really amazing and unique opportunity for you guys, and I'm sure you will like it as much as I do. Now, starting with the philosophy of the firm, when we are looking for projects, we look to mitigate risk and prioritize capital returns. And before we do that, we have to ask ourselves a lot of questions. Is this the right place to be investing? Is this the right time to be investing? Is this particular project the right project to be investing? And does it make financial sense? And then we have to ask ourselves whether we actually want to jump into this project. And with Quarry Road, the answer to those has all been a resounding yes. And we are going to explain why we think that is. The second part of our approach refers to our ethos of creating value without causing any harm. That can mean environmental harm. It can mean personal harm. And we try to live up to that. Getting a lot of feedback here. I'm just going to mute you. We try to live up to that standard because it's our reputation and could become your reputation as well. With this project, we've also had to use creative financial structuring. We've had to think about this in creative ways in order to make this work, as the property sits on two different sites in two different cities. Thanks to Ben and Ashki, we were able to come up with a structure along with Kenwood that really makes this deal work for everyone, both on the upside and protecting you as investors. So that is the approach. Let's look at the team that actually makes it happen. On the top left, we have Ben Marshall, who's the top cop in the shop. He puts things together. He puts things together and uses his dynamicism to problem solve and keep things moving along. To his right on the screen, we have Al Mendelson. Al, as you heard from before, is our director of development. He has a lot of experience. We will look at that more closely in just a moment. Ashki Hedvat heads up our capital markets. Below him, we have Dave. Dave is the director of our strategic partnerships. A lot of business experience, brings that to the firm, and just a great guy to talk to. To his left, we have our general counsel, Joel Kinney. I don't know if Joel's on the call. I'd love for him to pop up if he can, but Joel is the one who keeps it real and keeps me in check and makes sure everything that I say is publishable. And then we have myself, originally a software engineer, turned to real estate a couple of years ago and head up operations. So jumping into closer view of today's sponsors, we have Al Mendelson. Al is originally from South Africa. He has a degree in civil engineering, I believe, from University of South Africa, and has spent the better part of his career, which spans over 4 decades, developing real estate in the US. He's touched everything from corporate to commercial to residential. And even within residential, he's gone from single family, high-end luxury to a 25-story tower. So Al's seen it all. He's done it all. He thinks that these kind of projects from the engineering standpoint are relatively straightforward. So that's always resounding to hear because I don't know my up and down from a architectural plan. So I put my full trust in Al. We did mention this before the recording started, but Al was a big factor in bringing Starbucks to the Northeast. So if you enjoy your mocha spiced latte, you're going to thank Al for that one. Every time you drink one, think of Al. He also put up TripAdvisor's headquarters and has been a part of the Abapan expansion into the Northeast as well. Up next, we have Ben Marshall. Ben is a multi-university graduate starting off Columbia, where he got his undergrad in chemical...
It's chemistry.
Oh, just chemistry, right? Just chemistry. This is not Breaking Bad. He studied real estate at Harvard University, and most recently, actually very recently, completed his MBA at Yeshiva University. He's been a GC in the area for over 25 years and has built, started, and successfully exited on multiple companies. Most recently, he had a Green Stamp. His insulation business, Green Stamp, was his last venture before turning to real estate full-time. Now, during those 25 years, Ben's seen a lot of great projects. On the screen, you'll see just a few of them are relevant in size to the ones that we're doing. I had the opportunity to work with him on some cool stuff in an opportunity zone down in New Bedford, and his portfolio boasts a very healthy return. So certainly adding to his track record as a businessman and someone who is a strong real estate investor. For our third sponsor of the day, we have Ashke Hedvat. Ashke is a very experienced banker and has built a reputation in the finance world. As mentioned, we do a lot of creative things, and Ashke is a big part of that, making sure that the numbers that we're putting up are correct, based in reality, and will actually underwrite when we go to banks. So a big part of the team. Ashke has personally originated over $250 million in commercial real estate loans and has a proven track record of going full cycle on high-end value projects of his own. Before we go any further, just want to ask Ben and Ashke, looking at the deal here, because it is a little complex since we are buying two sites. Is there anything you'd like to share about the structuring of the deal and how that makes, if it has any strong aspects to it that you've been seeing?
I could start. One of the things actually that I like about this deal compared to a standard development deal is that we have de-risked a lot of the development risk by breaking the deal into two parts. We're going to have a phase 1 and a phase 2, and we'll get into that. But phase 1 is a simple townhouse development, really similar to the last project we discussed over at 71 Harvard Avenue. Similar, great returns, really healthy bread and butter project that the guys at Kenwood Builders are going to come in and do like they always do, is just knock it out of the ballpark. In fact, they built exactly, we'll talk about this later, but they built exactly the same model, just further down the same street. So on the same street, we know it sells, we know it's a great model, and it cash flows so well, that takes the risk away from the second half from phase 2. Phase 2 is more of a question mark. What are we going to get approved from the city? We know it's a super valuable lot. We know everything going on the block, and we're really excited about the potentials that it has, but it's all pre-zoning. We're at that early stage where investors are rightly nervous about what the returns are going to be. Nobody knows. We can't control a lot of different things. But that risk of what's going to happen in phase 2 is actually almost completely erased by the profits that we create in phase 1. So it's very exciting. I think this is that great sort of balanced effort of a chance to get really great returns and minimizing our downside by having that solid double or solid triple for your first at bat. So I'm excited about it. Ashke, what were your thoughts on this one?
Similarly, it's rare that you get an opportunity to get multiple phase and multiple cash outs here. And the first one, given that Kenwood has built one down the street and has had a lot of success with it, and we're building something similar, if not better, we're excited to be able to break it up. And I think some of the investors that would like to exit, the opportunity will be there, but something tells me this is going to be an exciting long-term investment that everyone will be excited to keep participating in.
Awesome. Thank you, guys. Speaking of Kenwood, we have Boris and Jerry here on the call with us. I'm going to give them a quick introduction and an opportunity to tell us about themselves. But Jerry and Boris have been in the construction space for over 20 years, building high-end products. They have a host of completed projects near the Corey Hill project that we're doing now. We're actually going to take a closer look at one of them. The last one there, 71 Westbourne Terrace, is just down the block from the one we're doing. The finishes and style are all going to be very similar, so the pictures that you'll be seeing are going to really prep your imagination for what part of this project can look like. Boris, Jerry, do you want to jump on, tell us a little bit more about yourselves and your vision of this project? You guys are still on mute.
Hello, everyone. My name is Jerry Korchmar, and I am a partner with Boris Kutikov. in this company, and we started about 20 years ago, and we built about a couple of hundred of houses, condominiums, buildings all together. And we believe that this project is very, very healthy and got to be very successful based on the fact that we did similar project, just two. This is 2 townhouses we're going to build, and the other one we did 4 townhouses. So on the phase 1, we're going to do 2 townhouses, and we would expect even to pre-sell them based on the fact that what we're doing lately. Thank you very much. I gotta leave in a couple of minutes, but Boris will be with you. So thank you very much.
Thank you, guys. So let's talk about the market and why we're so hot on the Boston Brookline area. Okay, so we have a map here with the property location right here in the middle. We have just down the block a Whole Foods, a CVS, a school, a playground, and you're in proximity to multiple hospitals, modes of transportation, and just off the screen to the right is downtown Boston, where you have a lot of nightlife, everything going on there, not too far from the airport. So this is a really, really great location. Now, Ben, if you don't mind, actually, there we go. Okay, lost my screen. I guess, Ben, you've been a long time Boston resident. What do you see in this area in particular, squashed between Commonwealth Ave, Washington, and Beacon Street, that makes this such a desirable location?
This is really the heart of Brookline. Even though you're right on the Brookline-Brighton border, you're a short walk from, first off, you have a bus line which goes up the road, up Corey Road, right over. So you're just steps away from public transportation. If you walk down Corey Road, down to the bottom of the hill, so now you're going down 40 feet, there's another 3 bus lines that go right along Washington Street. You see in this picture, the green line, there's 2 different green lines, which are rail trains. I'd love to be able to show with a highlighter, but I don't see it. So you're right by 2 train lines, which will take you right into downtown Boston. That's amazing. Access to a supermarket in a city is a really big deal. Having a supermarket, which is such a desirable supermarket, Whole Foods, which is, it's another just 45 feet away from this site, it makes living very, very simple. You've got everything you're looking for right there. And then you're right next to the Harvard Street shopping district. You're right next to the Driscoll Schools. Driscoll Schools, you see it listed right here, is one of the Brookline schools. And if you speak to Brookline residents, they'll be very, very excited about having a place where your kids can walk to school. I can tell you as a parent of 6 children myself that having the ability for my kids not to need me to do carpool is one of the great joys in life. Now, I don't know that the people who are going to buy this are also going to have 6 children. I doubt it. I don't think we're making it big enough for them. But however many children they have, not having to do carpool is a big deal. And the Brookline School District is one of the best in the country. There's a lot to say about being in such a comfortable location. It's really a grade A location. So I didn't even mention the CVS right next to it. So what you're looking at here, that's the Driscoll School on the top right, the Whole Foods. So all of these are not even a hop from the house. If you're looking at the CVS on the bottom right, the site we're actually talking about is at the end of this building, at the top of the block where the building stops. That's where our building begins. That's where we are, right there in the corner. On the other side of the corner, the left side of the CVS is where the Whole Foods is. So that's the distance right there.
Yeah, thanks, Ben. If you look at those pictures closely, you can see that same white building. So it's all really right in proximity here. And we're actually going to look at the rest of this building, the non-commercial space, because that is a very similar building to the one that we're looking to put up on the 185 site. This was recently completed. It's 113 luxury units. As you can tell, stunning views, gorgeous landscaping. We're still working on the complete architectural designs, but this kind of gives you an idea of what we'll be looking at. This was approved by the city of Boston, and it's part of the reason why we're bullish on this area and this site. What we're looking to do fits in line with what's already been approved. It fits into the neighborhood, and that's very important from the city's perspective, is making sure that we're doing something that fits into the area. I can't tell you what's going to happen, but this certainly makes a strong case for the second half of this project.
On a high level, though, Moshe, I'll point out that the city is probably not going to fight too hard about how many units we put in. They're going to fight because they don't want us to put in as much parking as we want to put in. So we would like to put in a lot of parking, and they're going to tell us they don't want parking because they're trying to move away from the amount of automobiles in the area. That's our biggest fight, is going to be on parking.
Interesting. Okay, cool. Because I've seen a lot of cities want to get rid of parking. So
no, Boston wants to get rid of parking also. They don't want cars. Mayor will want, like Somerville got rid of it. Cambridge got rid of it. That's the fight now in our developments is to be able to include parking because we know our tenants are going to want it, or the for the condos if we're going to use the condo exit, they're also going to want parking.
Interesting. Okay, cool. So this is one comparison that we have to the project. We're not doing something totally groundbreaking, although we are looking to break ground soon. We're just trying to do something that's been done here that we see there's a demand for. Let's talk about the other side of the project, Westbourne Terrace. Now, this is, and Boris, tell me if this is the wrong picture, but I believe this is...
Yes, correct picture.
Amazing. Okay. And as you can see,
Boris, where is this in comparison to the project that we're building?
Few blocks away.
On the same street?
Yeah,
Like
the same street.
15 houses away,
Yeah.
not few blocks.
Yeah, 12, 15 houses. Yeah.
And was this hard to sell when you guys built this the first time?
Actually, we pre-sell the first one before COVID, and we got almost 3.5 million. And the rest we sold during the COVID. It was tough time, but the last one we sold for almost 3,250 at the COVID time. So, but this is different time, and it's like 5 years later. I anticipate to get significantly higher price, and it's gonna be much better appearance. It will be much more warm curve appeal. So
Yeah, because if you see here, we down the hill, so behind the buildings we have huge wall, and on the current side we actually basically don't have any walls, and everything is open, so it's easier construction than this one.
awesome. Great to hear. I gotta say, I'm drooling just looking at these photos. It's absolutely stunning. So definitely looking forward to what 132 is going to look like. Coming up now, we have a similar project to what we want to put on 185, also completed by Jerry and Boris. I took this off your website, so forgive me if this is not accurate, but this is 55 Walnut Street. And just to give you an idea, again, finishes very high end. It should be a beautiful building. Is there anything that we want to add about this side of the project?
It's at 20 Boylston Street building.
it's a combination. 65 Walnut, 20 Boylston. That's where we are right now. And on the bottom, you can see this is our showroom where we sell kitchens and other stuff, and it's much easier for us to sell. Lately, we pre-sell everything. That's why I mentioned then that we anticipate to pre-sell all of this stuff, because once people come to our showroom and we show them the products are going to be installed, and they can choose different finishes, and if they have time, then they got excited. And we pre-sold 3 pieces lately just because of our showroom and our experience.
Yeah, it's a big deal, Moshe, for buyers to have a sense where they can, they'll see the sign outside, they understand what we're building. But for us to be able to say, listen, go meet the builders, they're right down the street. Go see their showroom. You get to see the finishes, the exact windows they're going to use, the doorknobs they're going to use, the doors. They get a chance to feel the quality and see the craftsmen that they are. It really makes it easy for us to communicate the quality that they're getting. And to be honest, the quality they're getting is not comparable to anything else that's on the market. The only way to get this quality, the quality work that Kenwood puts out there, is to go out and hire some of your highest end custom home builders to come and do custom homes for yourself. And that's the quality we're putting out there in a spec, which is maybe we're too high for the market. Maybe we don't need to put out such a high quality thing, but it underwrites well, it gets good returns, and people love it and they keep coming back.
That's awesome. That's really exciting. Speaking of the market, I do want to jump over to that.
Bye-bye.
Thank you, Jerry. Speaking of the market, I do want to jump over to that side of the conversation. I know you've been living in Boston for a long time, Ben, and I'm sure it was a great decision, but can you tell us a little bit more about why it was a great decision, looking at it from maybe a fundamental basis in terms of numbers and metrics that are important to what we're doing here?
Yeah, absolutely. We're not limited. We're not at Chestnut River Business House. We are not limited to any one specific part of the country. Even though we are here in Boston, we could be doing work in Texas and we could be doing work in California. Where we partner up with builders or what assets we acquire are really up to us, and we're looking at the strategy here. And I think it's important to look at why this product what we're putting on the street matches our strategic goals. First off, we ask ourselves 3 questions. We say, how attractive is the macro market? We ask ourselves, is the cost of entry right? Are we able to buy the product for the right price? And then, does it fit our skill set? This is our better off test. Does it match our strategy? Is it the right product? Now let's just talk about the macro for a second, the overall market. Boston, this is what you're looking at here. I don't know if you can zoom in. Can you zoom in on the first infographic? Go back. No, you're just on the wrong screen now. What you're seeing here is that rental vacancy rates in Boston, there you go, are the lowest in the country. In 2023, we're at 2%. Since that time, there has not been a lot of product put on the market. And I'm going to show you through these other ones. Now, the next thing is that you have to see on this next infographic is what are the products that people are looking for? Well, right now in Boston, 78% of the households have 3 or few or less people. 78% have 3 people or less, but yet the vast majority of the units that have to be rented that are available on the market are 2 and 3 bedrooms. What that tells you is, wait a second, if 78% of the market is only 3 people, 78% of the stock should be studios, 1 bedroom and 2 bedrooms. 2 bedrooms at the largest, but really we should be talking about studios and 1 bedroom apartments, and that's the minority of the stock. There's a huge unmet demand for studio and 1 bedroom apartments based on the household distribution in the Boston area. And the last thing, as you take a look over there, is that Boston has the 3rd highest rent in the country. So you have low demand, you have mismatch in demand, you have low vacancies and screaming high rent. And what does that tell you? It tells you this is a great market to be putting new product into. It's a fantastic market, and if you can put the right product in the market, you're going to hit a home run every time. Now that tells you that it begs the following question. The following question is, if the data is so obvious to us, how come everybody isn't doing it? So switch on to the next slide. So why isn't everybody building like mad here in Boston? Everybody should be putting in studios, 1 and 2 bedrooms. The problem is that, number 1, people don't have control over their construction cost. The margin between construction and the cost of borrowing is so tight right now that people can't get these projects built effectively. So our solution to that is to partner up with builders like Kenwood and control the cost from the source, and have the key people on staff like me and like Al who know the construction product, who know how to design projects, so we're not wasting any money. The second is permitting. Right now in the Boston area, there's a ridiculous demand, but the city can't stop tripping over its own feet. It's not even permitting enough projects to even come close to meeting that demand. The difference between the purple bar that you're seeing, that's the pace that it's on right now to meet the demand, just to get this housing crisis under control. And the gray bar that you're looking at right there is actually the requirement in order to be able to supply the market with what's necessary is totally being outstripped. We don't have, and I'm sorry, when you're looking at that, you're not looking at actually produced units. We're only looking there at permitted units, and most of the permitted units are not getting built because people can't control their construction cost. And this also, this last one shows you on a higher level the permitting rate. How does the permitting rate in Massachusetts compare to the rest of the country? We're miserable. We are down at the bottom. We're not permitting new apartments. Mississippi is doing better than Massachusetts. It's a real embarrassment, but it's a great business opportunity.
Awesome. I guess put another question out there. So this ties the large view of the economy to what we're doing, but what are we seeing on the street in terms of where these are actually comping out and how we work that into the budget that we created for this product?
So, great question. Right now, when you take a look at our underwriting, you're going to see that for the most part, we're always at the conservative side of the underwriting. The benefit of that is it's better to be conservative and make sure the project underwrites than to be too optimistic and be surprised at the end point. These are a series of projects, and a lot of them, because there's so few flats or so few townhouses and new construction being put on the market, a lot of them are old. You've got the Westbourne Terrace projects there on the top, and you say, well, those are only selling at 1,100 a square foot, 1,200 a square foot. But as Jerry mentioned earlier, those were sold in 2020. Those were 5 years ago. And if anyone's been around the US in the last 5 years, there's been a little bit of inflation that's happened in the market. Those are not super accurate numbers for where we're at. And even using the numbers that we've got here, we're seeing that the average numbers are coming in at $13.43 a square foot. And we're using this as the baseline of our projected sale costs. We fully expect to far surpass this.
Awesome. Okay, that's good. I might have a question for you. Sorry to steal you back.
Yes.
I want to talk about the vision for the property, and I'm going to go off mic because there's a fire truck outside. But can you tell us a little bit more of your idea for what these condos will look like and some of the construction, maybe any issues that you see from a engineering perspective?
Well, I think it should be very straightforward construction because number one, we don't have any hills there, and we basically it's not a lot of excavation because of the landscaping, the grading over there. It's actually forgiving. The engineering point, yes, we have few beams like you see the scar overhead, but it's all easy resolve engineering, so we shouldn't have any problem with construction. It's a beautiful building.
Awesome. Is there a feature in particular that really excites you about this one?
Well, I do like a lot of glass. I like design. We just saw design and also interior dimensions. This would be very lovely units. I think we really know. For sure it's going to be pre-sold.
Are these going to be standard 8-foot ceilings, Boris?
Maybe even taller. I think it's possible to make. I think it's going to be for sure 9-foot ceiling.
9-foot ceilings.
A little bit more. Yeah, we like to. It should be tall, so it's more volume. A lot of glass. So as you see, so it's nice.
All right. Well, thank you for that. If we could just move on to the second phase. This is going to be a 53-unit building. As Ben mentioned, we're going to do a mix of studios, 1 and 2 bedrooms. Now, we'll throw in a few 3 bedrooms there, but the majority will be 1 and 2. Ben, I see that we have a commercial space on the ground floor. Can you tell us a little bit more about the composition of this building and the mix of units that we're putting in there?
So the strategy that we have is as follows. We have to keep the building under 50,000 square feet to avoid a large process of what's called large building review in the city of Boston. Once we're on this side, so this building is now in Boston. If you go back to the last slide for a second, right? So this is Brookline, but the border between Brookline and Brighton is literally here between these 2 buildings, even though it's one open lot. Okay, so now go back. So now we're in Boston at this point on phase 2, and our challenge is to build up to 50,000 square feet. There's no zoning in Boston, so it's really a question of what's going to fit in best with the neighborhood. I should say there is zoning, but it's considered no zoning because the zoning is so antiquated that you can't build anything in Boston in the zoning using zoning requirements. So it's a classic example. At Harvard, we learned about Boston as being a classic example as a city that has no zoning in it. That said, the first floor in this area is likely to be a commercial space. So the current zone is called neighborhood shopping area. So we know they're going to want to see some level of shopping or commerce on the first floor. Then moving, and that's going to be sort of on the street side. We can do units towards the back, and we can do units up and above. And we can do a 5 to 6 story building. So the question is going to be exactly how much density they want us to do, how much green space, that balancing act. We expect it to be a U-shaped building like the one you're seeing on the bottom right here. We expect it to have a center courtyard. And we do know that the neighbors on the north side, on the westbourne side of the street, are the ones who are most sensitive to the impact of the building. So our intent is going to be to try to give them the most access to the courtyard so they feel the least impact from the large structure which is being built across the street to them. So that's the general strategy. We're working on it now. We're working with the architects now to get it in front of the city, to get it approved. But it's a long process. It will take us about 18 months before we're ready to pull a permit, to apply for the permit. And the permit itself will take another 6 months before we're granted the permit. So you're talking from today till 2 years from now before we are actually shovel in the ground ready to build on this project.
Got it. Okay. Well, that certainly sounds like a long process, but we are very optimistic about that. Just keeping in mind on the time, we do have a few more segments to get through. Let's talk about the financial breakdown of this for a few minutes, and then I do want to jump to one last guest that we have before wrapping things up. Ben, if you could maybe walk through the timeline and the numbers on this so that people understand how essentially they'd get paid for being a part of this project. I think that would be insightful.
Absolutely. What's interesting about this project, if it were just a standard development project where we're doing 53 buildings, 53 units, people would be putting their money in on day one and getting their money out somewhere around starting to get cash flow in year 4, and then ideally, a big check year 5, year 6, something like that, with a stabilized product. Here, what you're seeing is that cash flow really begins in year 3. So why does it begin so early? It begins so early because, and this is our worst case scenario that we're putting out here. So it begins so early in the worst case scenario because we've opened up, when we sell the Westbourne 2 townhouses, that opens up a lot of cash to be able to start distributing it to the investors. So you're seeing that investment happen. There is a scenario that is a serious scenario in which we're going to be able to return everybody's equity plus a significant return by the end or at some point during year 2. That's the scenario where we build to the cost that we expect to build, and we sell at the points that we're expecting to sell it at. So there's, depending on how well the Westbourne side of this project goes, it can totally de-risk the final development side of the project, like we talked about before. But that's very, very exciting. Overall, it's a great project. We're looking at IRRs in the mid-20s. We're looking at a 3x return on capital. That's MOIC is a multiple of invested capital. So you put in $100, you get back, in this case, $290. As cash flows start happening, the investors get a 9% preferred return. The yield on cost on this, if you are a New York investor, all you want to talk about is yield on cost. This one is almost a 10% yield on cost. It's a great, great project. 5-year term. The biggest thing here is that we are closing and we are fully funding this deal in May. So we need commitments right away. It's a fast moving project. The seller is not patient. So the bank is ready to close. We need commitments right away. We need money in the bank so we can close on May 30th, less than 30 days from today. So it's a very, very quick moving project.
Awesome. And you didn't even talk about that preferred return. We will get to that at a different point. I do want to start wrapping things up. And again, for legal bodies out there, Ben, if we could just go through some of the potential risks shortly, and then I'll have Matt join us for a few minutes.
All right. So obviously we can't control what the market's going to be like when we're ready to sell, neither for Westbourne nor for Quarry Road. Could be better, could be worse. We do know that we've given a strong argument as to why we think there's minimal market risk in the Boston market versus other markets. Tenant risk, when it comes to renting units, there's always issues with that. So we don't know what's going to happen with them. Same goes with lease, turnover, and vacancy risk. Financing risk. This is a project. We have our financing locked up for the Westbourne construction and for the acquisition of the property. We're going to have to refinance again when it's time to build phase 2 and we have our permits in place. We don't know exactly what it's going to be. At this point, we're just making basic assumptions based on the market today. Liquidity risk. Same thing. There's always the chance that when we're ready to sell, we can't sell. Luckily, with apartments, we're a lot more comfortable that we can always refinance and keep that moving. Regulatory and zoning risk. Things can change. We don't know how they're going to change, but they can change. And until we pull a permit on any of these projects, any change is a possible change. Operation and maintenance risk. We should be under warranty throughout all of these projects, so that should be minimized. And macroeconomic risk. We can't control the world as much as we'd like to. We are subject to the world's whims. All right. How was that? Nice and quick?
Perfect. Thank you. Now, Matt, I know you've been waiting quite a bit. I just want to bring this point up that for people interested in investing and wanting to protect their returns from taxes, there is a very interesting method known as using your IRA. To use an IRA for these types of investments, you do need to go through a custodian. And we actually have someone here from Camaplan, Matt Moore. Matt, can you give us maybe a quick elevator pitch, brief intro on yourself and how this sort of works for someone who may not know?
Sure. So for those of you who were at the beginning of the call, this will be repeat information, but my name is Matt Moore. I do business development at Camaplan. Camaplan is a self-directed IRA administrator, and what we're we're all about is being able to enable investors to take their money out, their retirement capital out of their just sort of like equities in the stock market and put it into alternative investments like this deal that we're talking about here. And in doing so through a self-directed IRA, you're still getting the tax advantages that you would appreciate in a standard IRA that you might have at Schwab or Fidelity, for example. So if you talk to Fidelity or Schwab about trying to invest into a deal like this, they're going to tell you that they can't hold it, and they're probably going to try to put you in a REIT instead. I mean, you're not going to get nearly as good of returns. So be in an investment like this, you're going to need to have a self-directed IRA, and so you're going to have to work with a custodian or an administrator like Camaplan who will hold these assets for you. So if it's something that you'd like to talk more about, I'll repaste my contact information in the chat, but happy to have a conversation with you about how it all works and how you get started. I was paying attention. I saw that May 30th timeline. So if you're trying to do something in this deal through a self-directed IRA, we should start having the conversation right now, because it does take a little bit of time to get money from your existing custodian over to your new custodian. I did some, just to throw it out there, I did some really like rough, back of the napkin kind of numbers about what you're going to save if you invested in a deal like this through a Roth IRA versus just doing it outside of a qualified fund. You're looking to save about $50,000 between the income tax and the capital gains tax. Again, back of the napkin on 100K.
That's huge. Thank you, Matt. Really appreciate it.
You bet.
Will send out your contact info.
Thank you.
To everyone as well. Just to wrap it up, there we go. If you guys know this show, please enjoy. I don't, but sort of familiar.
You need to go watch King of the Hill. This is now you know what to do this afternoon.
Yeah, exactly. My mom's on the call, Ben.
Sorry,
so we're calling this King of Quarry Hill. We'd love for you to join us on the way up. This is a great place to be. It's a great investment. More importantly, investing in these types of opportunities, the ones that we're presenting, are things that you can be proud of. You can walk around and say that you've developed a core area of Boston, and it's something that you can share with other people with pride that you've had a part of. So question is, how do you get started with that? We mentioned that things are coming up quick. We need soft commitments in 2 weeks' time, and then fundraising deadline is at the end of the month. We'll be available to answer any questions. You can book a session. We'll provide that link. And that
I just want to point out, guys, there's a lot of underlying assumptions we're making. There's a lot of calculations we've done. We're going to share all of that with you. We're going to give you our spreadsheets. You're going to have access to everything we have access to. Obviously, we can't put that in this webinar because it's just too much, and it's too much in the weeds. And if you're uncomfortable with it, we'll walk you through it all, because it's what underlies it's the foundation of all of these investments, is the assumptions we make, and you really need to understand them.
Thank you, Ben. We do have a few minutes left for questions. I just want to thank everyone for coming today, joining us and participating. I'll open up the floor. Thank you.
Thanks, Moshe. That was a great job. Just if you have a question, I guess raise your hand or just speak. Whatever works best.
I just want to say I'm very proud of you all. Wish you the best of luck. Prayers cannot be underestimated.
Thanks, appreciate it. Hope you enjoyed. Okay, great. It looks like that is all. Ashki, Ben, Matt, David, and Friedmans, thank you for sticking around to the end. Looking forward to keeping this up and sharing more updates with you guys. I know it's getting late on a Friday, so just want to wish you all a great weekend.
You too. Thank you very much.